So we're here today to talk about a fantastic, important, a lot of times crucial area for entrepreneurs, for ideators, and that's the issue of financing. Financing is not the only thing that you need in your business, but I'm sure we could all know that it is the one of the main things that you need. So we're going to talk to some key people today. We're going to talk to Karen, we're going to talk to Kyle, we're going to talk to Mark, and they're going to let us know exactly how do entrepreneurs, ideators, startup, SMEs in particular, even some large organizations, how do they access financing outside of the traditional banks, the traditional credit unions, to be able to grow and scale your businesses? And of course, these will include venture capital, angel capital, crowdfunding, grant funding, which a lot of you are here for, shaping the future of innovation, impact investments. So let's dive in and let's hear from the diverse experience. So I'm going to start with Karen. And Karen, can you tell us what are some key challenges that startups, innovators, SME face when seeking funding from the traditional banks? And if, in your experience, what sort of industries or what sort of innovations these traditional sources find risky with respect to investing?
Good morning, everyone. Firstly, I just want to thank CARIRI on this event, Shaping the Future of Innovation. And when we speak here about small and micro finance, so I am from the National Entrepreneurial Development Company, and we do meet a lot of persons or entrepreneurs who come to us and are seeking finance. So gladly, based on the two speakers before, Kyle Maloney and Richard Atching, they would have been identified a number of key things that we need to look at as an entrepreneur. So firstly, we have entrepreneurs coming to us, and one of the things we look at is always to be prepared. You're coming in for financing, and you need to be able, before you come to a financer who is looking to invest in you, you need to be prepared what it is I really want. Where am I? Where am I on my journey of development? What are the licensings I need to put in place? If it is I'm looking for capital, how much capital and what is the purpose of the capital? Because I'm thinking that if I'm coming to this financer and I'm asking for capital investment, how is this going to add value to my business? What is the projection on it? So there are a lot of things that before you walk into any organization, especially a micro-entrepreneur, smaller micro-entrepreneur, because you are still at the trajectory of being at more risk. So therefore, it means that you have to put your work into it before you come in. You do not want to be in a place of feeling frustrated, the same way the financer, the investor who is assessing your risk potential to feel frustrated as well. So we will want you come in and say, you come prepared, as the keyword, you come prepared, you find your information. What is the best financial support you want, right? So you do all your research on all the various types of financing. And as mentioned by Denise, whether it's crowd financing, angel financing, debt financing, or peer or from your family, what is the best you need at that point in time? What are the documents you have to support where you are? How long you have been in business? Have you kept records to show what you have done, what you're capable of doing, your abilities, your skills? So you need to be able to come with this information as knowledge when you go in and you identify which is the organization you're looking at, what type of finance you're going, because you're going to recognize that the person who's assessing you is going to be asking these questions, and then there was a good word that Kyle used to talk about confidence. You want to bring into that assessor that you are confident, you yourself are confident, because you want them to be confident in what you are bringing to the table. So we have persons sometimes they come to us and yes, they have a great idea. And we recognize that having a great idea also means that we need to be able to assess and give you support. So do you have the training for it? Do you have the skills potential? Are you the key person in the business? If you are impacted as the key person, what is the longevity of it? In terms of your market, is it that you are thinking of the business now? What is the growth potential? And if it is that you're thinking about the growth potential of the business, what are the things you are putting for that? Is it that is the business intention to grow up? Is there export plan? And the export plan will speak to in terms of what are the trade information that you need to put in place. So we try as much as possible, especially at NEDCO, is understanding and providing that guidance to entrepreneurs, because we know some persons will come in with the intention that I am seeking X amount of dollars without looking at the whole picture in terms of what you need. And we wouldn't want you to feel that we do not want to provide that assistance, right? But you will want to be able that when you provide the financial assistance, that the person is able now to also not only repay the loan, but also in terms of what is the growth perspective of your organization and what's the timelines we are looking at. So sometimes we say like you work way down. If it is your plan is a 2-year, 3-year plan in terms of where you expect it to be, then what are the things that we need to assist, we will want to guide you to put in place. So any entrepreneur who is going to finance, and sometimes there's a look of looking for the easiest way to get the money. So where I'm getting the easiest way to get the money may not necessarily mean where's the best place to get the financing, right? And because you want to look at what that particular organization is also offering you in terms of that support. Also to understanding what is the interest rate they're offering. So it's easy to come and say, here, what I am giving you 5% without even calculating what is the method used for calculating the interest, whether it's a simple method, interest, reducing balance, APRs. You need to understand that. What are the other additional costs that will come along the way? If the loan itself will be reviewed in a particular time frame, that will change the interest that in a shorter time than your business project to make that profit. So there are things, all these things you have to do the research before getting excited, because sometimes we see entrepreneurs who might go where we call the way man to get the money, or somewhere where it's quick, I need the cash. But the ability now to turn over that cash within the time frame and all the guidance needed to structure your business is not provided, and then you find yourself always trying to stuck in a place repaying a debt, right? So I will say again, prepare, structure, take your time before you reach to seek financing. There are things that needs to be done first, because you don't want to walk in a stage where your financing is because I need money and I'm just purchasing. I'm not planning. So when I am borrowing, it is because I'm making an investment into development and growth. So I'm seeing where that money is going to multiply. So that is where I will pause for this time being.
Thank you, Karen. So we're going to move to our friend or family, Kyle. So I know you started to tell us today, but we want to hear more. Tell us and share an example with us about a successful funding journey that didn't involve the traditional bank.
Try to tell it short. So I had with Tech Beach, we had a really good project that we did with IDB. We did a project that's focused on supporting early stage technology enabled companies. It's a project that we did, it started in 2021 and ran until 2023. 21, 22, 23. And the project size, grant funding, was just about $900,000 over the 3 years, so about $300,000 per year, which was quite sizable of a grant project size. To be able to access that, it really took a level of belief, first of all. Commend the IDB team, Vashti in particular, and Terry-Ann from Jamaica, Vashti from Trinidad, Terry-Ann from Jamaica, in having the belief in the work that we were doing on the event side of things, being able to bring community together, bring incredible people together, and doing those programs within our events to say, look, how can we scale this? And a lot of the times, you need that person that is a few steps ahead of you to be able to believe in the vision of what you're trying to accomplish. But in order to be able to access the capital, we needed to structure ourselves well to be able to provide the level of reporting, the execution, the management, to be able to deliver well on that project with them. And that was one of our larger projects, definitely coming from an organization as not your traditional bank and structure type of capital, as not your traditional form of capital. And it's good that we have access to these forms of capital available to us in the region, from the IDB, from the Caribbean Development Bank in Jamaica, Development Bank of Jamaica. There's another organization, CAF, the EU, constantly trying to do programs within our region that would give access to more risk-friendly capital so that we can begin seeing more just non-traditional things coming out from us. So yeah.
So I want to stay with Kyle for a minute, and I want to talk about platforms that are for funding. In particular, funding innovation, in particular, funding entrepreneurs, SMEs. Where do you see platforms going today? What is your opinion on these type of platforms, whether it's crowdfunding platforms, angel investment, capital venture? How can they assist the people in this room?
Yeah, we don't have access to a lot of these things that traditionally are available in like a US market. Anybody access crowdfunding here before? Yeah, right? So it's something that, quite frankly, is like nice on the internet. Anybody here access venture capital before? Yeah, another.
So that's the conversation. What is stopping us?
So, well, on the latter one, the venture capital side, I think a challenge that we have, what's different from Jamaica? Jamaica has more of a risk appetite type capital that's been able to develop in that market, right? Not necessarily venture capital in the sense of like support investing in technology businesses, but there's a private equity market in Jamaica that is way more aggressive. And a big driver for that is the ability to exit, right? In a talk I was in last night, they said that, one of these guys said that investors go into a deal walking backwards, right? And what that means essentially is they want to know how they're going to exit before they get in, yeah? And so if we don't have the ability for investors to be able to exit in any kind of meaningful way, then they're not going to get in. And so our capital markets aren't super appealing here locally, unfortunately. And so if they aren't the options for exit, then you're going to just have exactly what we're having here, a lack of investors getting in. And so what we're going to have is a redundant dependency on the capital that organizations like you through IDB and EU provide, and it's just going to get to a point because for whatever reason, I actually don't know what the real issue is a lack of major development for our exit markets.
Thank you, Kyle. And we raise that point to say that while there are many kind of financing we're going to find globally, not all of it we're going to find locally. But remember what Kyle said. You're going to have anyone remembers? Something about home and something about global. What did he say? Say it louder. Right, so you're based, but you have a product for global. And so when you go to the global market, you may then end up having to utilize different type of financing. And so here, you're going to probably use one type of financing, the NEDCOs, the EU, the IDB, the commercial banks, the credit unions. Somebody says Susu just now, right? That's valid, you know? Friends, family. Mark will talk a bit. But when you go abroad, because of course a lot of us were thinking global, then there are going to be other things that are at our disposal. And then we ask, and we may not have the answer, is why can't we import some of this? Because we're talking about innovation. So what type of new financing model will we, will I, will Kyle, will Karen, will Mark develop in the future? And that's a conversation for another day, but we turn to Mark now, and we're going to ask Mark the question, you know, what advice would you give to underrepresented founders seeking non-bank funding?
Can I step one step back and answer that Kyle's question as well? Just give me my view on it. And hello, everyone. Sorry, and congratulations to everybody who won the award. I know a few of you, and it's wonderful. And it's a pleasure. Thank you for inviting Caribbean Dragons here. We don't usually get this esteemed company of these folks. We're really happy to be on the stage, to be fair. We're only about a year old, or just over a year old. We're a non-profit, and our main mandate is to try to give, we're ecosystem builders, that's it. We try and give high potential founders access to resources. Pretty simple to scale. But in my short time being in the ecosystem and being a completely, unlike the folks on the stage, completely failed entrepreneur myself, went bankrupt twice, I have a view on this as well. So my view is I went bankrupt back in 2008, and why don't we have more capital? I think it's two sides of the coin, right? So one, back in 2008, I was the only person choosing to become an entrepreneur of my peer group. What do I mean by that is I had a decent education. I could go and join. I left BP. I was a BP man, an oil and gas man. Then I was an IBM man. And then I tried my two startups and failed off a cliff. But I chose that route. Prior to that, every time I was at an event with multilateral banking, it was around funding survivalist entrepreneurs. So folks making sandals, cutting up pineapple, etc. So the quality of the entrepreneur that we were supporting was very different, or the profile was very different to now. Fast forward to way past me, the folks in this room are highly skilled, highly educated, very motivated, and they've chosen the road of entrepreneurship and founding scalable companies. That was not the case when I failed. So that's changed dramatically throughout the Caribbean. Call it the Netflix effect or the social media effect. Everybody wanted to be Mark Zuckerberg, I don't know, but it's changed. The whole dynamic in the market has changed. These folks in this room can scale. Then on the other side of that, you have the capital. And I mean, everything Karen and Kyle said, absolutely, like, you have to come with a secure plan, but that wasn't happening 10 years ago. You didn't come with a detailed plan 15 years ago. You came with a hope and a prayer, right? And to Kyle's point about venture capital, the capitalists, investors walk backwards. So they want to make their money back 10x. But if you don't have anybody to invest in, they're not coming into the market. Again, that is changing. It's an amazing change that's happening. And I think we're having more investable folks coming through the woodwork. So now you're starting to see for the first time, and IDB talked about it last year, the most momentum they've seen in a generation of venture capital funds starting to emerge. Mixed venture capital funds, but venture capital funds starting to emerge. Somebody's doing a crowdfunding platform at the moment. We're building a venture capital fund as well, I know Kyle as well, to try to invest in the region. So things are changing for the better, but it starts with having investable companies, high scalability, high growth, very motivated founders, and then the capital will be attracted to the region, right? So, but you have to have scale. I met an entrepreneur out of Jamaica, and I don't think he's gotten the funding he wanted, but listen to his trajectory. This was his trajectory. I'm going to beta in Jamaica, and then I'm going to go to Bogota, and then I'm going to go to Ghana. So you already had a plan for scalability. Question is, how many people in this room have that plan for scalability? If you want investment, the person has to get their money back, right? So it's a difficult question, but I think things are changing. I just thought a word on crowdfunding. Crowdfunding is very, very tough. Crowdfunding, I walked through this with somebody who won crowdfunding in England the other day. And crowdfunding is not as simple as you think it is. Crowdfunding is, let's say you're trying to raise $100,000 US in crowdfunding. You need to bring to the table 2/3 of that to the crowdfunding platform. So just go back to the question of platforms. You have to bring 2/3 of that. So you have to bring a venture capitalist with 1/3, and then you have to bring your community who's already said yes, investing, and the other third. And then the crowdfunding platform will take you on board. So it's a very difficult proposition, right? But again, I think we're having platforms in the Caribbean that you can interrogate databases that are being developed now, where you will also have a listing of investing types. Sorry, that does not answer your question you asked me at all, but I just want to give you my lens on it. I hope that's helpful to folks in the room. You asked me about unrepresented founders, right? Which I think pretty much is, well, if you compare it to the US, that's everybody in this room, right? It's like we are the unrepresented founder. So I'll take it on 2 levels. I'll take it us to the world, and then I'll take it to us within Trinity. So us to the world, we are all the unrepresented founders. So the question is, how do we get on the radar of international funding agencies? How do we get on the radar of international investors? Tough question to answer, but my view is there's a whole concept that I think is a separate conversation around blended financing. So blended financing is mixing stuff like grant, which is this, with private, mezzanine, da-da-da-da. And the question is, how do we create vehicles for the Caribbean to allow our founders to access this blended financing so that they can scale and then get on the radar of the Rihannas of the world and the Kobe Bryants of the world and all those people who are big investors. Locally, I think it's about democratizing access to resources. So Caribbean Dragons does not care what vertical you're in. We're agnostic to fintech or fashion tech or anything. We just want you to have 3 things. We want you to be scalable, we want you to be disruptive, and we want you to be commercially minded. Commercially minded just means if you take investment, you know you have to pay it back, right? So you have to have a profitable business. The more that we as actors in the ecosystem can offer those resources equally and sort of on a fair playing field to reach everybody, I think that democratizes the whole process. And then the unrepresented founders, the folks that may not have access to immediate friends and family capital, for example, can still come to Caribbean Dragons, can still come to TBR, can come to NEDCO and find those resources. So I hope I answered the second question.
Yeah. Thank you so much for that. So we're hearing a lot. We're hearing that things are moving slower than we would like, but it's moving. We're hearing that we need to attract foreign investors. Of course, I will ask the question, this is a rhetorical question, it's not meant to be answered, but where are local angel investors? Where are local venture capitalists? Because of course, we have money in Trinidad and Tobago. We have those people who are able to do that, those organizations, How do we get them interested? How do we get them to be able? And of course, there are some who are doing it. So our final question to every one of the panel member will be, within the 5 to 10 years, so we're looking in the future, 2035, where do you see innovation financing heading? Karen?
Innovation finance. Okay, what I see is a lot of our, and even taken from the last speaker there, is that persons want, in terms of the processes, so we have to look at how, as financiers, how we innovate our processes to ensure that the funds for them, it is as streamlined, as easy as possible. The days of a brick and mortar, of coming and sit before a lender, and then you have to do the returns of back and forth documents, people are not interested in that, right? So we need to look at what are the platforms that we are building. Overall, in terms of Trinidad and Tobago, we have to look at educating our entrepreneurs, our community, on what is required out of them and where the space is and how to use the technology. And then we look at the platforms that we have that allows them now to easily access the financing, identify how much is required, their payments terms, and being able to receive the fund within a shorter period of time. That is what persons are looking for. So, and that is what we are building, especially when in NEDCO, what we look at is that we match also financing with building development support. So that allows us to look at the risk appetite of the entrepreneur, where you're working with them, you're able to give them take a larger risk, and they continue doing the business development support over any period of time to get them where they need. So I know Kyle would have spoken about in terms of Jamaica and his appetite. I think that we can be there. We need, in Trinidad and Tobago, we need to really move away, and that's where NEDCO would have started in 2002, where the conversation of micro entrepreneurs was limited, and persons weren't, the banks itself, the larger financial institutions weren't providing that. And we are happy to see that now there's a lot of other organizations that have started that conversation of seeing entrepreneurs and seeing the value in microfinancing. And we will want to support especially innovators. So when we look at innovative, I think it's particularly when Richard Aching spoke in terms of understanding that even innovative financing, there's a need for us to look at what are the other factors beside cash collaterals, maybe using IP as collaterals and things like that. We need to look at those things as what we want to use to support the financing of these entrepreneurs. That's where we look at. All right.
Fantastic. And so we take the same question to Kyle. Where do you see innovation financing going, but where would you like it to go?
Come back to my last point. I want to see our capital markets really develop, because that is what's going to be the real driver, as a catalyst. If we have a clear exit opportunity, the money is going to come in. And once the money comes in, the capital in all these sorts of forms that Mark was highlighting is going to happen, right? The mezzanine, the blended finance, you're going to get so much more opportunity. But it really starts at designing whatever incentive it is to see more companies come through and get that listing opportunity. Then you're going to see more acquisitions come in, you're going to see more private equity type structures come in, venture capital come in. But I'm not a finance expert, so maybe one of them could tell me was the real challenge in something that, for me, seems like an obvious problem to solve, but may not necessarily be a simple solution. But the problem, at least we could align on the problem so we can begin making steps towards what the solution looks like.
Great, and the ideators in the room, we can put our heads together and we can solve our own problems, yes? So Mark.
Sure. So I would say there are a couple things in my head. One, the future of innovation finance in the Caribbean has to be predicated on a cultural change, right? So we're talking at the governmental level, and a simple example, what fueled startups in Silicon Valley was that institutional capital, pension funds, were allowed to invest. Trinidad, not the case, so regulation change. In Jamaica, they just increased the capital allocation, I think from 10 to 15%. So pension funds can invest in alternative investments. So that culture has to change. Our family offices, our angels, their culture has to change on how they invest in innovation. It's very interesting trying to raise the fund and meeting all these folks that they are very interested in innovation, but they do not understand the culture, so they want to buy 80% of your company, not 20% of your company, which means then you're kind of put aside. And they want to be involved in it emotionally, which is wonderful, but it's not helpful for scalability, right? If they can't be involved in every single company. Secondly, I would say innovation financing for me personally, I think Kyle might agree with me here, needs to include South America and LATAM to an extent. There are huge markets there, and we want to cross-pollinate financing between the Southern Caribbean and Latin America. That's a huge component for me. And then thirdly, I go back to Kyle's point on the blended financing. That for us, I think, is really the sort of the recipe we have to cook in the Caribbean. How do we put the different forms of financing together that works for us? And I'm so passionate about it. We're trying to hold a small workshop to address this exact question in October and bring investors in the room and try to understand what are the bugbears and how can blended financing help. So I would say those are three things that come to mind.
Great, so thank you so very much, panel. So we've heard that we're doing some good things, but we still have a long road to walk. We have to look at our risk appetite. We have to look at our landscape. We have to look at some of our laws, look at being able to both accept and do blended financing, look at other regions like Latin America, even Europe, yeah? Well, let me not make that joke. You know, we have listened to NEDCO, and they're doing some great work. And so we really want to thank Karen and Kyle and Mark for sharing with us today. We do have the ability to take 2 questions. So if anyone has a question, yes? It's on already, I believe.
Hello, yeah. Thank you for that. I wanted to ask if you could flesh out the idea of the exit option. Obviously, I have an idea of what that means. The investor wants to make sure they're getting their money back, but why is that a barrier? Why can't mechanisms be properly outlined of how they will get that, obviously, once you could demonstrate that you have a profitable business plan?
Yeah. All right, yeah. So exit options typically for investors are 3 things, right? If you're comparing to the US, typically that's like the benchmark is everybody talks about the IPO. That's what startups are always gearing up towards, right? IPO, IPO, IPO. Why? It's because that's the time when investors get the opportunity to cash in on that initial investment they would have made early on, right? When was the last time you heard about IPO in Trinidad, right? So that's challenge 1. Next way investors get back their money is on a sale, is on an acquisition, right? When they invest in a company that's worth $1 million today and then somebody buys it for 10 some years down the road, right? We don't have too much acquisitions that happen as well. Challenge 2. So then where does the investor then make the money, right? And so the only way for the investor to make the money that is more certain is for the business to end up becoming really profitable and providing dividends, right? And so if that's just the only way of making money for an investor coming in, then they need to feel really confident that this business is going to be able to provide really strong dividend returns over time, yeah? And those are the top 3 ways in which investors think about return on capital invested in a business. And if we're just pocketed down to that singular one there, then yeah, the options for capital to come in just going to be limited, and I think that's the root of why we are where we are right now. But I can allow, once again, I am not the finance expert, and so maybe I have some gaps. Maybe Jason, you can tell us if I'm going wrong or what you think. Spot on. All right, see?
Sorry, I'm a little bit sick, but It's a little bit of an out-the-box question, but it was sort of in jest spoken about Susu, right? And I'm just thinking in the same way that a lot of the conversation yesterday and today has been about, yes, think global, think local, go global. Is there indigenous innovative practice when it comes to financial modeling that we could consider that, is there any precedent maybe from other sub-Saharan parts of the world of thinking through innovative financial models that came from our past, came from ways in which we operate naturally in this region, culturally being confident, not because part of the exit problem could also be a mismatch of expectation. Like the Silicon Valley type of investing requires multiples of returns that our types of businesses, at least at this stage of our ecosystem development, can't necessarily match. Is the expectations of VCs aren't always in alignment with where we are developmentally. And I think sometimes expecting that to align is potentially outside of our cultural way of doing things, you know, and have we applied that same sort of cultural confidence to how we ideate around financial models and financial, access to finance coming from ourselves?
I will take this.
Just quickly, sorry, right? My thought on that is, we have like a colonial mindset. We always just want to adopt whatever is just fed to us from the top and not adapt necessarily to what is best for our context. And I agree with you wholeheartedly. I wish that that was the case, that we would find some adaptation that is more innovative to our cultural context than necessarily just always importing from the north to the south.
So I'll take this. I know Mark might have his comments on that. So in 2002, when NEDCO started, they came into the environment because the micro-entrepreneur could not get a financing anywhere from the banks, right? And the conversation was definitely too much at risk. And when we would have started, we recognized that there were things that entrepreneurs did not have in terms of mainly cash collateral. So we looked at a softer way of giving collateral, that being you use your own assets, prove that it was yours, and we use that collateral. So basic things is sometimes your stove, your osterizers, equipment, whatever you were purchasing, that, because that is our culture, right? There was a statement that Mark made that I really liked. He said, we just want you to repay our loan. And I think that is what we were going with the concept, that we are taking that risk and we're giving that confidence in you that we are using your asset as security and we just want you to pay our loan. So we have to balance that with our culture as well, of those who just would not pay their loan. Because if it is, when you calculate the value of recovery, you'll recognize that your stove and your osterizers cannot be resold for the value you would have most likely taken your loan for, right? And we in NEDCO, it reached a stage where we gave a lot of loans on the belief and the wanting to support the entrepreneurs, and then the cost of recovery to run down these entrepreneurs, and especially being a state company with the impression that if I'm taking money from the government, then it's a grant. So we had that risk of having a high delinquency now, not because we didn't assess the loans properly, but because we wanted to give that entrepreneur that opportunity to be able to develop and grow. And even though we would have provided support system. So it is a twofold as a financer of finding that balance of being here. We want to understand the community, we understand the culture, we want to give you that, but we have to also assess what is your risk, and then the institution. So that same entrepreneur may go to maybe RBC and they may operate differently, right? They may put that debt as a priority to repay. So we have to constantly reconfigure in terms of what. So we had to do a restructuring at NEDCO, and some of the things we would have dropped out. So at first when we started, persons had to come with a business plan. And we recognized that also was a failure because they will go and pay for a business plan. The entrepreneur, when you come to evaluate them, they could not interpret the business plan. They didn't understand it. They were not implementing it. So what we looked at is that when they come to us now, our assessment and evaluation, questions that we ask in a discussion, we develop and we build the business plan from there. So that way it makes it easier for them, and then we provide them with that template and the information that we would have gathered. And then, of course, there's a lot of questions we're going to ask. And that's why when in my earlier, when I spoke, I talk about come prepared. You as an entrepreneur, doesn't mean that you have to have everything. But if you are investing in something, this is what you believe your value is, and this is what you want someone also to invest into, then we will want you to do your research. What is your product? Where do you want to go? Work your way backwards. What are the things you need to put in place? So when you come to any financing institution, you do the research, which works for you. So peer financing, crowdfunding, then debt financing. You need to understand the organization that you're going into and be able to prove and say, here, I am worthy of that investment in, right? So it becomes difficult, and trying to come back to your question, finding that perfect fit, because even we talk about susus in Trinidad, we know about number susu, the word is susu bus, because the first person take the money gone, and the other persons get catch running behind, right? So we have that culture of trying to find that perfect balance, of what we want to do. So it's a continuous work. So we continue to be innovative in terms of processes, right? We may not have the perfect product, but the processes to get to where we want the entrepreneur to be able to provide the finances as possible. We are doing our research to see what's out there in the market and what works for Trinidad and Tobago. So we continue to learn. So this opportunity here, yesterday I was here and I was started to walk around and talk to some of the exhibitors just to gather information on what products and services they are doing, because we are in the process now of trying to even develop new loan proposals to suit the type of clients. And I realized a lot here yesterday was a lot of them really green business. So we're saying, maybe we need to look at a product specifically for green businesses, and what are the things that they will need. They will be different from various types of business. So I hope I answered the question. Okay, thanks.
Okay, thanks. So just the gentleman before, the question regarding the exit options as well. Just the thing is, you need activity in your financial market, right? So the last thing that Kyla said was dividends. It can take a long time. If you invest $1 million and you're getting $1,000 in dividends back every year, you'll be dead by the time you get back your money, right? And you don't want your money back. You want your money back plus more than you put in the savings account to the bank, right? So you want at least 10%. If you're taking a lot of risk, you want 10x. So the only way to do that is to invest in companies that are highly scalable, high growth, so that they're much bigger when you're selling them when they started. And the main ways are IPO. But to be fair, in LATAM at the moment, most of the exits are acquisition. And even the biggest, I think, acquirer at the moment, I can't probably correct this, is Mercado Libre, which was a startup, and now $1 billion company. But you need activity in the market. It's just a feature of small countries, small economies, small markets. We don't have that. That's why I say we need to combine the Caribbean rather than just think about Trinidad. So we combine the markets, and then we immediately launch into Latin America. And that creates activity. So I hope that gives you a different lens. To Anya's question, I think, first of all, work is being done, especially by the IDB labs and so on, around, there are lots of papers produced on blended financing and taking lessons from Africa to the Caribbean. That's still a process that's happening, but there's a lot of academic churn on that. So that is being looked at. But from the investor perspective, let me just throw another lens on you. Karen talked about a busted susu, right? That's a real thing. But when I say it's a real thing, if you want an exit option that is more prolific around the people of Trinidad and Tobago, what you have to remember too is the Jobs Act in the United States that Barack Obama did was to loosen the reins on venture capital. But to be an investor, you had to be an accredited investor, which means you could lose the money you invested and not suffer any real consequences on your quality of life. How do we measure and balance that? If a susu gets busted, people lose their livelihoods, right? So when you're exiting or you're investing on that side of it and putting it out to a more democratic or equitable Trinidad-esque model, who's educated enough to invest in it, and who can lose their money? I don't have any answers here, but I'm just saying it's a very delicate question. That's why pension funds to this date aren't allowed to invest in alternative assets, because people need their pensions. So, and in larger countries, you do get exposure to it because you can invest in a pension fund or a mutual fund, and those funds invest in other things, right? But in Trinidad, the question is who can afford to lose the money, and how do you make that open to those groups of people, right? I don't have an answer, but I'm just saying that's a problem. There are people who can afford to do it, but those people have a culture of, if I'm going to acquire something, I want 80% of it because I want to guarantee it's going to scale. Because I don't want to lose my money, so I'm going to put my company, family office resources into this, and I'm going to run it. But the problem is they only can do that 2 or 3 times. They can't do it to 20 companies like a venture capital fund can. So again, there's a balance there on a cultural shift as well, you know. But you're absolutely right. People could, yeah.
All right, so we can only take one more question. And they're here, so you can meet them after.
My question ready. We hear you.
He had the mic.
Thank you. My question is really around the awareness of creating enabling environments. So I'm aware, for instance, that in some countries that losses are allowed, well, investment losses are allowed to be written off against taxes. So, I mean, that's really something that the government needs to do. So, for instance, the shipbuilding industry in Scandinavia is built on that model. So the average Scandinavian is encouraged to invest in shipbuilding because if that shipbuilding venture or the specific asset, which is a specific ship, doesn't make money, the losses which flow through to their investment, they can write them off against their personal taxes. So my question goes towards, you know, the question of enabling environments.
I just want to make a comment on that quickly. Well, I mean, we are none of us from Ministry of Legal Affairs here, so we will not be able to respond to that. But I just, sometimes when we talk about what we see in various cultures, I always try to put it back to our Trinidad concept. And I remember when Pizza Hut first came to Trinidad and Tobago, and they had an open buffet that you could have just gone and just eat the salads anytime you want. I remember. Yes. Yes. And that had to stop.
Right next to Fatima.
Yes. So we always, and point being that certain things that work in other cultures don't always work in Trinidad because so we have to be mindful about what we can see is done across there, whether it would work across here. But the position on, your point is valid. It's something for us to look at, and the opportunities where, as entrepreneurs, I know every year sometimes you see various things are added in terms of being in tax exemptions. And when there's a forum before the ministers to speak on what are the things that entrepreneurs are looking for tax exemptions, that can be considered, that it can be put forward, and they will do their evaluations and their consultations to determine whether or not it's something that can be done. So it's something to keep in mind.
But Philip, on the vesting side, on the money side, I 100% agree. The government in Trinidad and Tobago, whoever that is, needs to get more involved in creating an environment that enables investment. So that is everything from tax credits if you're investing in venture capital, changing the legislation to allow for venture capital, changing the legislation for institutional investors like pension funds to invest in alternative assets. I think all of that needs to change. In Jamaica, as Kyle mentioned, you had the Development Bank of Jamaica that has a venture capital arm. In Barbados, you have this new incarnation, third incarnation of Future Barbados with a Minister of Innovation. We're falling behind in TNT for sure. We need to have a direct plan around innovation high potential founders that's separate to just entrepreneurship, but high growth, high potential founders, and develop a plan around that. I don't mind sharing, I have talked about it a few times, my view on it is leveraging the special economic zone and using it as like a tax-friendly haven to produce clustering for attracting not just Trinidadian startup founders or Trinbagonian startup founders, but startup founders throughout the Caribbean to register in TNT and make this their intellectual and primary office. And I think that clustering would then propel a whole different mindset on both the investing side and the founding side. So a lot more has to be done, yeah, for sure.
So thank you, Karen, Kyle, and Mark. As we end this panel, we'll ask Hayden to share some small tokens of appreciation from the project and CARIRI.